It's my pleasure to introduce Capital, finance and investment club at IIFT that part fosters interest and knowledge in finance and in covering areas like investment banking, equity research, and corporate finance. Each year, under trade bills, Capital organizes a national finance summit and hosts internet national article writing competition. This year, with theme The Great Reset, categorizing digital growth for the 21st century, harnessing energy, financial technologies to position India as a global leader in financial services. Now, I invite the Capital Club to begin the session.
A very good afternoon to everyone present here. It is a great pleasure that I welcome you all to the National Finance Summit 2024. Capital, the Finance Investment Club of IIFT Delhi, works towards developing interest, enhancing knowledge, creating awareness, and promoting student-industry interaction in the field of finance. It aims to provide students with insights in different domains of financial services and industry, such as investment banking, treasury, equity research, and corporate finance. We are proud to host the National Finance Summit under the aegis of Great 2024. Our theme for this year's summit is harnessing emerging financial technologies to position India as a global leader in financial services. The theme has been chosen to keep in mind the increasing importance of India as a global player in the capital markets, alongside the transformative role technology is shaping contemporary financial services. We hope to have a holistic and fruitful discussion that explores the interplay between the transformative impact of technology and how we can leverage it to assist India in its growth story in the financial industry. I now invite my colleagues to take over the stage and introduce you to our esteemed panelists.
We would now like to welcome our distinguished panel of experts who will be sharing their insights and have a discussion on today's theme. Starting off with the summit, we would like to call upon Karwal sir. Sir is an experienced professional specializing in supply chain finance with over 18 years in the industry. He currently holds the position Head of Supply Chain Finance and Credit at HeroFincorp, where he has been driving innovative financial solutions for SMEs since 2022. Prior to this, Sir spent over 16 years at ICICI Bank, where he held several leadership roles including Regional Head of Trade Finance and Head of Trade Finance and Wealth Management. His expertise spans credit appraisal, policy development, and digital transformation in lending. Sir did his schooling from DBS Archipuram and is an IIFT alumnus back of 2007. We are pleased to have you, sir, with us. Please join us in welcoming sir to the stage. And a passionate advocate for building high impact and sustainable tech enabled businesses. He is the founder and CEO of SavelN, a rapidly expanding healthcare and fintech company poised to revolutionize private healthcare in India. SavelN is backed by Silicon Valley based Y Combinator and other top VCs from USA and Europe. In a short span of 2 years, SavelN has built India's largest outpatient healthcare network of 6,000 plus practices in 100 plus cities in India where Indians can avail any healthcare service while paying a no-cost EMI based payment plan. In his previous role, he set up Rupee Ready, a leading fintech lender, and FinFriends, a non-banking finance company that has served over 10 million users through digital loans while achieving profitable business outcomes. Sir has also worked with IndusInd Bank, EY, Bank Bazaar, and Aviva. Sir is an engineer and holds masters in business from IIFT. He was also adjudged Economic Times Young Leader. Jitin sir is passionate about fitness, biohacking, and he's an animal lover with a particular interest in dogs. And runs a popular podcast by the name Hot Shots with Jitin. We are pleased to have you with us, sir. Please join us in welcoming sir to the stage.
Now I'd like to introduce our next guest, Kapish Kaushal sir. Sir is Vice President of Financial Services at ONDC, where he is helping democratize access to financial services in India. Sir has 11 plus years of experience in financial services space, working across multiple domains and geographies.
Prior to ONDC, Sir spent last 4 years in the Indian fintech startup ecosystem in digital lending and payments, where he has held leadership positions across business development, product development, alliances, and P&L management. Before his fintech startup journey, Sir was a consultant with MasterCard and Deloitte, where he advised financial services clients on their digital banking proposition, card value proposition, activity-based costing, and global KYC compliances, among other projects. Some of his past clients include Citibank, UBS, and Deutsche Bank. So started off his career in investment banking with Goldman Sachs, where he worked on an IPO of a UK challenger bank and an M&A between two leading stock exchanges in Europe. Sir has a degree in economics from Sri Venkateswara College, Delhi University, and postgraduate degree in management from IIFT Delhi. Please join us in welcoming him to the stage.
Hi, good afternoon, everyone.
Good afternoon, sir.
It feels great to be back at the Institute. But post lunch, how's the Josh, guys? Hi, Patta, hi. Okay, good. So, it would be 2 hours of lot of Gyan, and I'm sure with these team speakers there who are also active, we'll be able to provide some value to you. Okay. So today I'm going to talk about, to some extent, on blockchain and take you through a case study which has been a live transaction which has been concluded by ICICI Bank very recently. I hope everybody is well versed with terms like Incoterms, bill of lading, letter of credit. I checked with the organizers and they said, of course, see the point there, right? I hope, and my assumption is correct, right? Because I'm talking to the institute where all this is assumed and understood. So, this is a transaction which has happened between a couple of Singapore and Indian banks, right? And it is the first live shipment transaction which has got concluded. The main highlights of this transaction were we've managed to digitize the cross-border trade. We've achieved paperless trade with digital financing documentation while enhancing speed, accuracy, efficiency, and reducing costs. This is the first global shipment which has been processed entirely digitally. So I'll take you to a PPT also to just show you as to how trade transactions are done in the country as of now and what has been the difference with the way which we've done. This has been, of course, with participation with Niti Aayog, DBS, and most, which is a very big shipping lineup, which I'm sure all of you know. So, guys, we're going to make this interactive instead of a monologue. Anybody can tell me what blockchain is. I'm sure we are all here very smart bunch of, probably the smartest, smartest bunch of people. What is blockchain all about? This is a very simple diagram of blockchain. I'd be happy to hear your thoughts. Let's make it interactive. Anybody? A special prize is announced करने पड़ेंगे क्या? Answers please. Yes, please. Can we have guys? Can we give a mic to this?
Good afternoon, sir. I'm Jitin from the batch of 26. Sir, blockchain is a digital ledger where the transactions get stored. Whenever a transaction takes place, a new block is created. Sir, it's basically a chain where each block contains a transaction information, and it is encrypted using a SHA-256 hash code, which is quite unbreakable, and it provides extra security. And a block, whenever created on the blockchain, can never be erased. So, record of a transaction stays on the blockchain forever, and it facilitates transactions to cross-country transactions also. So, it's the 3.0. It's the future of payments.
So I hear you saying it is the future, it is an amazing technology, but in one word, what does it achieve? Keep the mic with you. What does it achieve? Trust, right? It ensures and facilitates a secure transaction, whether it is done domestically or it is cross-border, right? And that is where its application to trade finance, especially in international trade, is the highest, and for commercial banks too, because commercial banks end up making a lot of money on trade finance, whether it's through currency conversions or through managing cross-border transactions or opening LCs, right? Thanks so much. So, I think I'll just move to this slide. Guys, the other side, same as here, there's one more. Okay. So, on the left side is how a traditional trade finance transaction actually moves, right? Okay, which is you have a buyer and then you have an issuing bank, there's an advising bank which comes into the place, right? And there's a seller, there's a carrier, and so on and so forth. That is how traditional trade finance happens. There are a lot of documents which are underlying documents in any trade transactions, like LC, bill of lading, and so on and so forth, which are transport documents and invoices. And these documents have to transfer across the world. I'm referring to international trade transactions. That's where the blockchain-based trade finance comes into the picture, where it has a distributed ledger, right? And which is, of course, anybody can refer to it, basically decentralized. And that is how the fund movements, good movement, and profit movement happens across. So coming to the case study, this is how we did it, right? So everybody can see step number one, ICICI Bank. The client, Jindal Steel, comes to ICICI Bank and says that I want to import high-grade steel from Singapore, right? And a special kind of alloy. This is where he comes to ICICI Bank's private blockchain portal, okay? And before I proceed with the introduction, how many of you are aware of Ethereum? Do you know Max? But man, would you be kind enough to tell us what Ethereum is?
Ethereum is again a blockchain.
First example, is it a private blockchain or is it a public blockchain platform?
As far as I know, I think it's a public.
That's right. Please go.
That's a blockchain.
आगे बोलो. Guys, more raise of hands. Mic tap. Yes, sir. You.
Good afternoon, sir. I'm Kaien from the batch of 26. So it's a type of cryptocurrency which people use through wallets and access through that and invest their money in it. So, yeah.
And it's possibly one of the largest right now.
Yes, I guess Bitcoin is the largest one.
Yeah. But in terms of development,
Yeah, Ethereum.
and especially in terms of trade finance applications, this part of my the gentleman next to you. You want to yes, sir. You want to add something? Please go.
So I do think that Ethereum is more suited for the transactions and trade finance. It's better than Bitcoin in some aspects. For example, it uses proof of stake, instead of proof of work to validate transactions, which is quite environmental sustainable in a sense. When it's a proof of work for validation, it uses lot of energy and it's not sustainable at all. But Ethereum eliminates that problem.
That's okay. Thank you for your answer. So, guys, this is a simple import transaction to India. I have enumerated the steps and numerations. It's very simple, right? So, there is a LC issuance which has happened here, which goes to the seller's bank, to the advising bank. What is the seller doing here? The main component or the main point which I want all of you to focus is point number 5, which is issuance of bill of lading on the blockchain, which uses Ethereum, right, and it transfers to the seller. Once the seller sees and confirms, he is confident of the fact that the goods have been loaded and they've been shipped. So therefore, it's adding authentication, it's adding confidence. Once that is being done, ICICI Bank presents both the bill of lading and there's the acceptance which we need from the buyer, saying that after 30-60 days, once he has the goods of the shipment with him, he will make good the payment. Once that is confirmed, the BL is handed over to Jindal, who's the importing party. The buyer, Jindal, goes to Maersk, who's the shipper, presents the bill, the BL, which is the title of the goods, right, and takes the physical possession of the goods as such, which concludes the transaction. In here, what is happening is, on the right side, ICICI Bank's blockchain platform is a private platform. Ethereum, of course, is a public blockchain platform. There are a couple of APIs which we have developed for the private platform to communicate with the public platform, right? So that the PL, which has been lodged into the Ethereum, and other documents are easily able to transfer onto the private network of ICICI Bank, which enables the buyer, which is Jindal in this case, to verify the documents and make good the payment. This is how the entire transaction has happened. We concluded the first one. So what is the evolution? What will happen going forward, right? Everybody is aware of the SWIFT system? Yeah? So possibly, right, अभी इसमें एक और game है. How does the payment happen under the LC, right? The payment is not happening in cryptocurrency at this point of time. The payment is happening in a very different way. The INR payment from ICICI Bank is going to the vendor. The vendor is paying in cryptocurrency to the buyer, to the seller at this point of time, right? So, of course, there are a lot of gaps in the current transaction which needs to be bridged. However, how do I combine? So key benefits: digital processing, LC application processing, issuance advising with real-time tracking of status. E-presentation of documents is the most important part, which includes bill of lading, right? And there is a reduction of that to about 8 to 10 days in application to acceptance. The most important, of course, is preservation of authenticity and uniqueness of documents issued over the blockchain. What we believe is that the evolution which is bound to happen in the next couple of years is that LCs could disappear, the SWIFT system could disappear. If everything could happen on blockchain, if India has its own cryptocurrencies, probably the underlying payment of this entire transaction could also happen in cryptocurrencies. Then, as the evolution happens, right, there is a very large lending market of factoring which could develop on this platform. Factoring basically means that जो seller है, right? Usually he gets his payment in about 30 to 60 days, right? But if he wants immediate liquidity, he can, after the bill has been accepted by the buyer, he can take that to the international market and for $100, he can get it factored and get $95 against it immediately, right? So therefore, that is immediate liquidity for him. So in times to come, that is how we see the evolution happening. Probably LC is disappearing, the SWIFT code, the SWIFT code also getting, also disappearing due course of time because everything gets built on blockchain because there is authentication and very fast movement of both documents and the payments as well. Obviously, as far as goods are concerned, what's the time lag raha hai, wo to lagega, right? That we can't help. But overall, the documentation, authentication, and payments would be far streamlined using this platform. And as the platform moves, factoring, other lending solutions would also get developed from it. Right? International factoring would evolve to be developed on this and with faster authentication methods. Plus, there would be a lot of new startups who would be coming to develop new technologies across this ecosystems. Jहाँ startups आते हैं, the money follows the trade. There will be a lot of VCs who would be there to build applications in international trade. And out of all the 10, 11 applications which are relevant on blockchain, trade finance is the only, I think, very strongly, which will deliver the commercial ROI, which means that commercially it will be profitable for all the players in the ecosystem and it move forward, right? Thank you so much. I can take questions right now or we can take questions later as well. So I would suggest that I would invite the next speaker to come in. Over to you.
Hi everybody, a very good afternoon and good to be here, good to be amongst all of you and thank you for having us here. And I was told that the theme of today's discussion is harnessing financial technology to position India as a powerhouse in financial services, but I'm a fintech entrepreneur. I would like to leave some thoughts about financial technology architecture in India, the industry in general. Some of you may want to go down the entrepreneurial route, and I think this session may give you a glimpse as to what the landscape is, what some emerging technologies are. And if you want to, let's say, talk about it in general after the session also, I'll be happy to talk. But I'll just give you a glimpse of what the ecosystem looks like, how we are developing as a country, and how mainstream financial services are being driven by fintech specifically. So, India is amongst the top 3 countries in the world when it comes to fintech. Now, this data, I will not go into the specifics of data, but you can see the number of fintechs in India is growing significantly because we are a country of 1.4 billion people and penetration of financial services has been significantly affected by the availability of financial technology. And if you see last 6-7 years, I think it's common knowledge, maybe over the last decade, it's common knowledge that the trinity of Jan Dhan, Aadhaar, UPI, mobile penetration in India is second to none. Right? We have the cheapest mobile phone tariffs in the world. It makes it very easy for financial products to reach the end user using technology. Right? So I think which is why today we are already amongst the top 3 markets. I think we have a payment system which is second to none. We have an extremely aggressive lending ecosystem. InsurTech is also burgeoning, and I think wealth tech and RegTech, regulation technology, I think these are some verticals which are extremely vibrant, and I think they're also now supplying to the world, especially payments. We have started outsourcing to the world. But this gives you, let's say, a sense of how much money has gone into Indian fintechs. You must have heard of decacons, unicorns, unicorns, millicons. There's a lot of, let's say, nomenclature which could be confusing, but essentially, I'll also give you a sense of how much money fintechs are making. What is the real, let's say, where is the moolah, where is the money, is it true, is it not true, is it filthy, is it solid, right? But I think as a summarized, let's say, outcome, we should know that we are amongst the top 3 fintech markets in the world with the highest adoption rate of fintech. So the adoption rate index of India is about 87%, which is the best in the world. And I'll talk about that as well. Now, this slide will give you a snapshot of the overall market. The market size is about 25 billion. In revenue, we have grown 56% year on year. If you compare it with other fintech contributors across the world, there I think annual growth rate is about 15-16%. So Indian fintech industry is suddenly producing more revenue. Initially, when they were, these products were launched, they were not monetizing their services. Now they're monetizing their services. They're contributing to revenue. The valuation combined is now more than $100 billion. Now, if you compare it to Silicon Valley, so like I run a company which is headquartered in the US, Silicon Valley is extremely vibrant. There are a lot of companies which are extremely high value. Right? If you see among startups also, ChatGPT, for example, is a glorious example of how lofty valuations can be for new age and futuristic technologies. But in India, fintech is about 100 billion, which I think is solid. There are 35 plus companies which are either decacorn, unicorn, or unicorns. And I think if you see small companies which are growing fast, which we call as minicorns, so there is a very alarming jump in companies. Some of the companies have understood how to scale fast. People have understood from previous mistakes. Some company makes a mistake, the other founder learns. It's a cycle. It's a cycle which lets you improve, lets you iterate and produce better results. And of course, last 1 or 2 years, you must have heard about let's say the winter of financing in venture funded companies. So that winter of financing meant essentially that the amount of money which was going into fintech companies or startups in general definitely took a hit. So there was a decrement of about 33% in the overall amount of money that these startups were possibly raising. But I think that's fine because I think people are also becoming more efficient and they are now focusing profitability. They are not building growth at any cost models, which I think has been the way of many people. And again, I think one area in financial technology, the more we will grow, is cyber attacks. Very recently, one of India's largest health insurance companies, Star Health Insurance Company, their entire database was exposed. Entire database, right? Like millions of customers. And it is a very sensitive item. So I'm just giving one example. This has happened with mainstream banks, this has happened on debit card based, credit card based. So the more people focus on technology, and I think that's something who's mentioning, use of blockchain, which is where if everything is encrypted well, even if you lose, you won't lose, right? But I think this is a very real risk. The more we talk about penetration of financial services using technology, the more people will target, such databases, such ecosystems, or pools of information which they can exploit. So I think this is important for all of you to understand, assimilate, think about that. Now, I think as I said that in the last decade or so, Indian fintechs have generated almost $100 billion in valuation, right? I spoke about the adoption rate of 87%, which is the highest. Today, penetration of financial services through fintech is leading to higher revenue. I talked about monetization. I think that's very important. So if any of you want to think about products, I think in a classical startup ecosystem, you launch a product, probably initially you launch a premium model where you don't want to charge people, etc. But in fintech, if you don't make money, if you're giving money to somebody in lending, if you're selling, let's say, an investment product, if you're selling an insurance product, if you don't make money, I think it's a problem. So technically, traditional software, SaaS companies can still operate on SaaS, premiums, etc., and then they can monetize over a period of time. But fintech in general should prioritize monetization, which probably wasn't done in some payment companies initially, which became super big, had huge customer bases, but now they are able to monetize. And now that flywheel is, begun to operate in a glorious manner, and I believe the revenues will keep going up. The other thing that I want to talk about is that a lot of initial fintech development was focused on urban setups, but I think the next stage could also be extremely focused on Bharat. So 60% plus of our population is still in rural India, and I think because of the recent unemployment, etc., which is talked about in the urban setup, there's a lot of people going back to agri. So I think there could be a lot of play in agri, fintech. There could be a lot of verticalized products that could be built to combat the use of and penetration of financial services. So I think I see that happening. And specialized verticals will become focused. For example, I personally run a healthcare-focused fintech company because we believe that healthcare is gold, right? I think if India has to become a top 3 economy, 5 trillion, 10 trillion, whatever, then all of us have to be at our fittest best because that's combined productivity and economy, right? So I think there could be a lot of work that can be done by fintech towards health, towards maybe, ESG goals that will come, right? UN talks about some sustainability program. It could be water, it could be solar, it could be health, it could be education, etc. So I think all these sunrise sectors which will possibly propel us to the next stage of growth, if at all there is tapering that happens after, let's say, a decade of 8% plus GDP, I think that's where the component of financial technology will have a significant role to play. Because as an economy, economies are cycles and we've grown at a certain clip for the last decade or so. I think that's where the use of technology can help us overcome certain barriers if at all we face any. So I think that's an important point to note. This is a slightly heavy slide, but it should be heavy because that's the kind of public infrastructure which India has built over a period of time to support financial technology and financial services. So if you see, we are a country of 1.4 billion people. All of us have Aadhaar. 85% of Aadhaars have linked bank accounts now, so that linkage has happened. Aadhaar and PAN linkage has already happened. So there's a lot of, let's say, information there which can be exploited. I mean, there are billions of authentications on Aadhaar happening for KYC. It's become so simple. Back in the day, you would go to a bank and somebody would sit with you and ask you for your KYC. Now it can be done within like 2, 3, 4 seconds, right? DigiLocker is a very innovative concept where all of our KYC and important information is housed electronically in a safe ecosystem, in a consent-based architecture where somebody can see consent for your information and you can provide that information in real time in an authenticated manner. eKYC, very similar to Aadhaar-based KYC. GSTIN, I think there's a massive disruption in GST that has happened, right? And I think it can still improve, which it is. But in general, there are millions of registered taxpayers there, and this is why tax income has gone up. UPI, I think, is the big daddy of them all, right? I think it's the single most disruptive change in financial space in the last decade or so. And today, India is exporting UPI to multiple other countries, including the evolved countries like European countries are now taking UPI architecture from us. So that's brilliant. A lot of work can be done on UPI. Now, the next layer of innovation is credit on UPI. Recently, there's a lot of work which is being done on providing credit on the payment there that is available. Aadhaar-based payment system. UPI Lite version has come, which is the light version, quicker version, less authentications, seamless, faster, better. Data layer is extremely, sharp. So today, anybody can see a consent from you, and all your bank account information can be provided to a lender or an insurance company to make credit assessments on you. And in real time, results can be provided, money can be provided to you in real time. Now, back in the day, this used to take days, weeks, right? So I think the advent of technology has fundamentally disrupted how finance is being consumed and supplied. And I think the next decade or so, the consumption will be further disrupted. And I think that's where the conversation is currently happening, because a lot of work has happened. Now people are preparing for the next decade, and we will be participants in that decade. So I think it's important for you to think about what the architecture provides to you. Health, again, I think there's a very big tech program on health which Prime Minister Modi is running, where all health records are being digitized. And I think we ran a very successful COVID program also, where all our vaccine records were at least digitized. The next stage is that all of our personal records can be digitized, interoperable information structures on your personal health, which can be provided to a hospital or a doctor at the click of a button. I think that can be very disruptive. And if you overlay availability of credit, then you can just disrupt healthcare, right? If credit or if availability of money is not a deterrent, then you can imagine how significant that impact can be. So that's happening. So I think there's a lot of work happening. I think Kapil is here to talk about ONDC, right? So there's a lot of work that is happening on ONDC, Open Network, right, for a variety of things. And Open Credit Network also, OCEN has come, right? So it's a democratized version of credit that can be made available to people. So I think there's a lot of work on the infrastructure layer that India has done. And this has happened in the last 5 to 10 year period. And I personally believe that in the upcoming 5 to 10 year period, all of these information layers can be exploited gloriously. When I say exploited, I say this in the positive sense. To build innovative products, to build innovative solutions, to make it very convenient for people to start, and see a significant lift, like a hyperbolic growth. Right? It's like an inflection point. So I see the inflection point is yet to come. I think we've seen a very disruptive decade or so, but I think still the inflection point is yet to come. And that is what will become the strength of India. We can together leverage this, right? So I think I want to just share some segment level growth rates. some of you want to get into these specific segments. So retail loans has been a very successful ecosystem, has grown very well between FY20, FY23. I think there's a 1.5x growth. Credit cards, 4 years back in India, there were 4 crore credit cards in circulation. Now there are 10 crore credit cards in circulation. In a 5-year period, that number has become 2.5. Insurance is becoming very big, right? There are publicly listed startups like Policy Bazaar, which have done a lot of good work in insurance, and I've personally seen them build for the last 15 years back in the day, right? So I think it's very enabling architecture and ecosystem that now companies have built. They're also going public. They're able to, let's say, stand the test of public market assessment. That's a very good indicator. And of course, let's say mutual funds. Everybody talks about SIPs. Everybody talks about mutual funds. Everybody talks about saving. I think if you go to Conclude, you'll be saving in SIP probably, right? So I think that's the strength of financial services products and technology there. Makes it very easy for people. And I believe that there's a lot of work yet to be done in this regard. Because, for example, insurance is still 1% of GDP penetration. It's nothing. It's plain nothing. 15 years back when I started my career in insurance, this number was still 1% of GDP. So GDP has grown. Number of insured people must have also grown, but that ratio hasn't changed, right? So there's a lot of work that can be done. And if you see on the right, there are some global statistics, and you can see very easily that there is a huge gap between where we are and where some of the evolved countries are. So when we talk about the impact of fintech in broader financial services, insurance, lending, health, non-health insurance like your cars, etc. There's a lot of work, a lot of product innovation that can come there. I think so I think one topic, somebody talked about some aspects of blockchain, but there's a lot of clamor about AI. And I'm sure all of you are reading, inquisitive about AI, what is AI, how is ChatGPT is also YC, my combinator company like Sam Altman is YC. A lot of work is being done in the Silicon Valley. Now there are multiple iterations of all these models, language processing models that have been built. But I think the application layer of AI is still largely a function of how well you use ChatGPT. And we're building on top of it. And most of the work is happening there. Apart from some LLM models which are being built from the ground up here in India, a couple of them I'm aware. So I think there's a lot of application that can be done of AI in financial services. It could be customer communication. It's like how you are on Zomato and you seldom talk to an agent. Everything is being dealt by an AI customer assistant at 12 in the night, right? Unless something is really serious, then the human layer comes into the picture. So how you interact with customers, how you build products for customers, how you make sure that you retain customers, how you cross-sell to customers, how you ensure security, how you detect fraud. So how you look at like millions of transactions and you're able to detect fraud. I think there's a lot of application of AI. You juxtapose that with the availability of financial technology products, and this together, I think, can have a compounding impact on the overall financial services trend that we can build as an economy from a consumption perspective and delivery perspective. So I think these are certain areas that I wanted to talk specifically about. And I think that this is very, let's say, it's contemporary. It's like you all are living it, we all are living it right now, and there will be a lot of changes that you will see in the next couple of years because there's a lot of work which is being done on a continuous basis. We're an aggressive economy, we're an economy which is ambitious. So people, they remain focused on innovation, etc. So I think it's very interesting time for all of you to think about this ecosystem. It's become quasi-mature. I use the word quasi-mature because I think some mistakes have been understood, some opportunities have been understood. And I think now is the time for us to become a little bit more mature, deliver more better impact, higher revenue, more sustainability, more public companies. And I think that is the combined impact of financial services that we can generate, which will then propel the economy. Because if any country has to grow at, let's say, X% GDP, the financial services has to at least grow by 2x. Otherwise, the X can't happen. It's a very simple arithmetic. It has stood the test of time over decades, over centuries. We will have to grow the financial services market by at least 16 to 18% CAGR if we want 8 to 9% GDP. So I think I'll leave you with that. I'll be happy to take questions after the session, as somebody mentioned, but this is what I wanted to share with you. Thank you.
Mr. Dipesh Kaien, sir, who was recently recognized and head Treasury India at OakNorth. Sir brings extensive experience in treasury management, risk assessment, and financial markets developed through leadership roles at Macquarie Group and Bank of America Merrill Lynch. His career insights include crucial functions like Group FP&A and capital hedging at Macquarie Group, where he led major transformation initiatives. At Bank of America Merrill Lynch, he specialized in over-the-counter products across multiple asset classes. While his tenure at Centis Pharma demonstrates his skills in expertise in enterprise risk and management across international markets. A CFA charter holder at FRM with postgraduate diploma in management from India IIFT, Sir has demonstrated innovation in treasury operations and digital transformation. His recognition among India's elite 30 treasurers reflects his significant contributions to modernizing treasury management practices and his thought leadership in the field. Please join us in welcoming Sir on the stage.
Good evening, everyone. Thanks for having me. Almost 11 years since I returned to campus, so it's been a long journey. Good to be here. So I'm going to talk about what is ONDC. I'm not sure how many of you are familiar with it. It's one of the digital public infrastructure, as we like to call it. Journey started with our really back in 2009, which was part of India Stats. We were digitizing identity. Once the identity got digitized, then it was the Jitin program through which bank accounts were opened. I think now 55 crore bank accounts are opened under Jitin. Then Geo came in, data costs kind of substantially reduced. I think we have 7 rupees per one GB cost, which is one of the lowest in the country. And then subsequently, obviously, UPI happened. We do what 40 billion monthly transactions. So continuing that legacy, right, of how we're going to democratize financial services, ONDC was started off in 31st December 2021. So it's Section 8 non-profit organization, largely owned by banks. So we'll talk about what ONDC overall is, what is our play in financial services, and what is the kind of audience and democratization that we are aiming for. So I'm pretty sure all of you have done transactions in traditional commerce platforms, right? Whether it is Amazon, whether it's Ola, whether it's Zomato. Now, what happens, let's say hypothetically, as Zomato's example, if I wanted food, I'll open up the Zomato's app. Let's say I'm looking for pizza. I will search, some of options will come in. I'll select one of those options, right? Make the payment. The fulfillment is also done by Zomato, the logistics. And if there is any issue, post-order delivery, again go back to Zomato. So all these steps, right from search, discovery, payments, fulfillment, post-fulfillment, today is end-to-end done by one platform, which could be Zomato, it could be Swiggy. What ONDC essentially does, right, we unbundle this 4-5 steps and make it interoperable. In our parlance, there are 3 essentially entities. There's a buyer application, there's a seller application, and there's a logistics provider. What I mean by that is a buyer application is anyone which has a user base and they're looking to offer any product or service. Like today, Ola is a buyer application on ONDC, Paytm is a buyer application on ONDC. A seller application is someone who has the inventory but don't have the users. So I might have restaurants, right? I have an inventory of restaurants, but I don't have as such users or marketing budget to get users onto my platform, right? So today, Magic Pin is one of our seller applications. UEngage is one of our seller applications, and the logistics provider simply, delivers food from point A to point B. So the transaction that was initially managed by Zomato end to end. Now there's a Paytm which basically manages the front end, designs good UI, good UX. So they are managing the search, the discovery part of it. There's a seller application which is bringing the inventory, right? Digitizing restaurants, showing the catalogs, how is catalog prepared, how many images you put in that catalog, and how do you prepare, how to digitize yourself. So, and logistics provider delivers. So the same transaction now could be placed on Paytm, where a McDonald's was onboarded by a Magic Pin and the delivery happened by a shipper operator. So you kind of unbundled the entire existing transaction and made it interoperable amongst these players. Now the question is why you're doing that. Right today, the model still serves web with Zomato or Swiggy or Amazon. But essentially three reasons, right? One is obviously the commission structure that gets charged to the sellers. So in India, less than 5% of MSME sellers are today actually selling online, right? Have any sort of digital commerce presence. That's a too low statistic when we are talking about 6.4 crore MSMEs in this country, and only 5% or less than 5%, being able to participate in digital commerce. And even those two are ending up paying a much higher commission structure. Second is, if I'm a seller and I'm doing sales on any of these platforms, I'm abiding by that platform's terms and conditions, right? Whether it is COD, whether it is a returns period, whether it is other things. Third thing, let's say today I have an issue with any other platform, I don't want to work with that platform, the ratings, reputation, reviews that I've kind of gathered over a period of time goes away, right? If I go to platform A to platform B, I'm starting from scratch. So that is the entire idea. Here, obviously, the commission structures are much lower as compared to the digital platforms. Second is your reputation is portable because there is no single as platform. These are actually internet backend APIs or open APIs which allow you to connect with each other. So even if you don't want to work with a particular server application, go to their server application, your ratings and reputation is portable on the network, right? And third, you set your own terms and conditions of business. That's primarily the genesis of why ONDC was brought in. Like, have more and more sellers sell online, take them digitized and obviously have a reasonable commission structure. And if you are able to get a large chunk of the inventory, then there's more choice for the buyers to kind of come and buy online. So that's the fundamental construct of ONDC. Now, how does it come to financial services, right? I'll take the example of credit and I'll extend it to insurance and investments as well. Now, in credit, largely, there's no logistics because it's a digital delivery of goods. You get digital credit, digital insurance and digital, let's say, mutual funds. Now, in our parlance, there's something called as a loan service provider, which is essentially a buyer application or basically any person who customer kind of goes to and applies for a loan. Like it could be a Pesa, Paytm, it could be Google Pay, anyone, all of those are examples of NSPs. And then there is a lender who's an actual financier, right, which is a bank or an NBFC. Now, today what happens is if I'm an LSP, I go to lender A, lender B, lender C. Each one of them have their own kind of API stacks in terms of doing it. So for me, each time I have to do a separate API integration to work with that particular lender. Second, I get only entertained by the biggest lenders who have the cheapest cost of funds if I'm at a stable scale. If I'm a startup, I'm not likely going to get entertained by the large banks, right? Because I don't bring that volume to them. Third, as an LSP, I want the user experience for my customers to be as digital and as seamless as possible. And in some of those products, some of the journeys might still be digital, but then there are some still manual legs that are happening. And the more manual it is, the more the experience and higher the cost it is. What we do is we write standard API specifications, right? It's an open source thing, so it's available for anyone to join. Any LSP or any vendor wants to come on the network, basically either builds APIs according to these specifications or writes a wrapper on their existing APIs to conform to these specifications. So as soon as you're conforming to these specifications, as an LSP, I'll get access to all the lenders on the network. As a lender, I'll get access to all the distribution points on the network. So one integration kind of allows you to have seamless communication with multiple entities. And because we are kind of setting up the specifications, we have kind of mandated that we want as digital as possible. So we use a lot of digital infrastructure, whether it's account aggregator, eKYC, e-sign, e-mandate, UPI autopay, all are stitched together in the digital journeys. Now, we are essentially focused on three things at financial services at ONDC. Credit was our first product. So we started off with unsecured personal loans. We did our first loan in January this year. Today we have 9 loan service providers and 4 lenders that are live. I think we get another 2 lenders live this quarter. There are other products, GST-based invoice financing, working capital lines for sole proprietors, partnership, private limited companies. And the other one is, alternate data. Now, as a buyer app, I might have certain alternate data which can help a lender or an insurer. But each, buyer app or LSP or an insurance broker might store that data in a certain format. So the attempt is, can I standardize that thing so that even when the, buyer apps or LSPs change, the format is the same. So that the other side can actually build their underwriting in a machine learning format and can give you real-time offers. So our credit roadmap has these. Then in insurance, we picked up 3 problem statements: motor, health, and transit insurance. Again, all 3 of them severely underpenetrated, and we'll come to some of the statistics later. And investments, we've actually started off with mutual funds. Reason for picking up that is, in India, as per present statistics, there are about 5 crore unique investors in individual funds, which is still very low as compared to, the size of our country. And the idea is that can we really sachetize it and take it to the even normal individual, the writer that is coming to, right? Can we make it really small ticket size, bite size, allow them to participate in the growth of the capital markets and especially the equity markets that this the country has seen. So let's take a small example that starts with credit right now. If Dinesh is a dairy farmer based in a small village, does majority of the transaction in cash, hasn't had taken a loan or taken a loan like that, doesn't have what we call a new to credit or a thin file customer, and wants to 10,000 rupees to kind of take a very small loan. Now, what happens on the demand side today, right? One is obviously there's information asymmetry, right? As a small farmer, I'm not aware of what all availabilities to me. I might have some existing debt, informal debt from money lenders, and I certainly don't have collateral, right? I don't earn that much to give you a property or gold or something like that. Now, if you look at from the supply side, right, a 10,000 rupee loan doesn't make me any money, or doesn't make me the money that I want to make, right? Because just to service that 10,000 rupees, especially if I'm having a branch structure, the unit economics is not viable. And only the way that you can do that is to sachetize and do it digitally. Most of them, or some of them, when it comes to MSME lending, some of them have now moved towards and have gravitated and really good underwriting models. But if you look at the entire spectrum of our public sector banks, private sector banks, a lot of them are still following a very balance sheet led underwriting approach as compared to a cash flow based or an alternate database underwriting approach. And the third obviously is the risk appetite. Now, when these challenges come together, the idea of ONDC is that we should be able to get a 10,000 rupee loan to that farmer or to that individual or sole proprietor. And that can only happen if the entire journey is end-to-end digital, right? And that means, right from the customer entering the information, the validation of the PAN of that individual, real-time offers that comes to the individual once an offer has been selected, a video KYC or an e-KYC depending on the transaction cost, and then setting up mandate and everything else on that side. So that's the focus in terms of working with these demand side partners, supply side partners to have full end-to-end digital journey and a standard journey which helps save cost. The one reason of building standard specifications is then there is a lot less of tech cost that the supply side or demand side needs to meet. This is just one specification you're kind of getting access to a distribution or to the supply side. The same thing you apply to insurance now, right? Imagine a person running a small grocery shop in tier 2 city earning about 3,000 a month. Most likely he or she does not have much awareness about insurance. Forget about taking one. And I don't know how if most of you or some of you would have had work experience before coming to IIFT. Try reading your own health insurance policy. I'm pretty sure some of the jargon is like even you won't understand it unless you've been in the space. It's that complicated, right? And now, if she runs into a medical emergency, and I think one report from Jitin a few months back that most Indians are just 1 hour hospitalization away from bankruptcy. It's a very true thing, right? Because you're pretty much where insurance is getting taken, either it's employer covered or people who are earning a certain salary are taking that insurance. There's a large chunk of missing middle. Obviously, there's the bottom of the pyramid which gets covered under Ayushman Bharat, which is the government mandated scheme. But there's a big chunk of this 40-50 crore which insurance companies like to call it the missing middle, right? In which there is lack of awareness. Why do you need insurance? And it's a product which if you buy and you pay premiums, but the value you only know when you're in a hospital or you have an accident in a car. Because when you have to be discharged and the insurance company is not paid to the bill to the hospital, you're not getting discharged. And that time the insurance company will say that these things are not covered or whatever is covered. So it's a complex problem in terms where demand side is not aware. The product is complex. The second thing is the affordability of that product in terms of having an adequate coverage. And on the supply side, obviously, you don't see a lot of product innovation that has come in. At least I should see a lot more product innovation that has come in the insurance space. As well as the insurers having end-to-end digital, insurers using alternate data to underwrite, pricing of the premiums having an alternate data, right, rather than having standard risk models. I think Jitin touched on it, 1% insurance penetration. It's very true, the statistic has not changed for 20 years, right, which is very surprising when you look at what, as India we did for payments, right, I think how we did for identities, but that certainly, there is a lot more work that needs to happen in insurance. Now, third problem statement that we picked up, right, is wealth creation. This is one of my favorite statistics, right? If you look at just January 2009 to January 2024. If you had done nothing and just put your funds, whatever SIPs in Nifty 50, that money has grown 7 times. Forget about alpha, beta, whatever it is that fund managers will do. This is like a basic Nifty 50, which has your TCS and Reliance and HDFCs of the world. Like, if person would have just put it, you would have money would have grown 7 times. The question is how many Indians were able to take advantage of it, and how many people are aware about this product and have accessibility to this product. Now, mutual funds at a certain ticket size are available and relationship managers, but the minimum ticket size offered by very few AMCs today is 100 rupees, right? Which again, now our idea is, can I make a 20 rupees daily SIP possible? Right, a rider, a grocery, an urban company, serviceman, whatever they're earning, can I save 20 rupees in a month? Can I save 600 rupees in a year, 7,200? Let's say some growth becomes 8,000, then can we facilitate a loan against mutual funds for that person? Because as such as today, nobody's sending that 8,000 rupees to that person, or even if they're doing it, there's other structures associated with it. So the idea is that we sachetize mutual funds, sachetize passive funds, right? So we don't want them to get into mid cap, small cap, which they don't understand. But at least sachetize and make this product accessible at a price point that they will feel comfortable investing. So again, the challenges say, it is low financial literacy, risk aversion, affordability, supply side. We ran a unit economics exercise with few of the AMCs, and it took almost like 40 rupees to 120 rupees just to onboard a particular investor. So, and this is not talking about customer acquisition cost, it's the onboarding cost, right? So, if I am doing a, let's say, 100 rupee SIP in a year, it's 100 rupees, imagine 1% expense ratio, making 12 rupees. Just to break even operation cost, I'm taking 5 years, right? So, and I'm not adding the commission that I'm going to the distributor, neither I'm adding the customer acquisition or marketing that I'm doing. So, if you're going to bring that, then you have to have a real serious dent into operation costs, right? In terms of, and make the process obviously as digital as possible. Now, those are the challenges that we are focusing on, right, as a digital public infrastructure. Standard rates for FS have standard specifications, which if I'm an insurance broker, I want to work with 10 insurance companies, then I don't want to be doing 10 integrations. I just want to come at one place with one integration. I get all the inventory of that, all the 10 insurance companies, irrespective of my size, right? All the products that are available with me. And vice versa, we want to create multiple distribution points. Second is sachetization. So there's something where it is Aadhaar-based cost, whether it's UPI auto-pay, e-NACH, e-mandate. Today, I think the UPI, the Aadhaar charge is about ₹3 rupees per ping. In 3 years back, it was 20 rupees. Now, that was one of the implementations that Open brought about, right, which I think Jitin touched about. When you made that 20 rupees to 3 rupees, you made KYC, e-sign, everything for the entire industry much more feasible. And you kind of help, able for a lender to unit economics to work for smaller ticket size. So a lot of work that we do is focused on sachetization. A lot of work that we do is on alternate data. What is the data that a buyer app has? How can we standardize it? How can we make it into underwriting models across the multiple use cases? And of course, the entire focus, which is in our name in terms of facilitating digital commerce, is to have digital delivery. Right? The more digital it is, the more low cost it is, the more sachetized it will become. So that's what we're doing. Happy to take questions at the end.
Hi everyone. So my name is Dipesh and I just give a brief introduction about myself, right? So I work in Treasury, right, of fintech bank, right? So and before that I used to work in a bank called Macquarie, right? So a big bank, right? Top 4 trillion bank, 350 billion assets, right? So I have how a query branch looks like, right? I traveled to Sydney, went to Gold Coast. I didn't find a single query branch. Didn't find it, right? No branch, right? And that is true with my current organization as well, right? OakNorth, right? Now I tell you how a bank works, right? So my first question would be to all of you, right? Which crisis for the banking industry has been bigger, like 2008 or 2023? 2008, right? So some of the strategies that I show, right, will actually show you as to how the industry has evolved, right? Though the crisis was much bigger in 2008, but the impact may or may not be as severe as it was in 2008, right? And that is because the entire ecosystem has changed, right? So let's just learn about how a bank works, right? In a very, which is apart from book, right? Okay. So how does a bank strategy work, right? First, let's say I have a well-established bank, right? The first thing that I need is how much business I'm going to do, right? So, okay, so business gives me, okay, how much, these are the loans that I'm going to write, right? They come to Treasury, right? Now they say, okay, I need to write 10 million of assets in the next month, right? I need to raise 10 million of money. I can do wholesale funding, I can do, deposits, etc., right? Then the deposits are raised, and I allocate it to the business, right? That's how the bank works, right? Okay, it will always be at a greater margin, less margin, right? That comes later, right? Now, Treasury as a function is responsible for protecting banks against most of the financial risk, right? It can be liquidity risk, it can be interest rate risk, right? So first I touch upon some of the models that are employed by these so-called fintech banks, right? Including mine, right? So the strategy of OakNorth Bank is very simple and very unique in a sense, right? They will raise funds from retail depositors, right? Around 85,000 pounds, which will be covered under insurance protection scheme, right? Then they will go and which will be at 3%, 4%, 5%, right, depending on the product that they're raising. Then they'll go and write these loans to the SMEs, which are high risk. But your depositors at all point of time are always protected. And now people like SoftBank, etc., right? They will write a check for you very quickly, right? Because the business model is very unique. Your depositors are never at risk, right? So even if you don't realize what you are writing and you go bankrupt, no one is at risk, right? Because it is all covered under insurance protection scheme, right? So it is a very, very unique model, and more fintech banks are going towards it, not in India, but in abroad, right? Because what happens when you write a small check is that the credit risk and the hassle of collecting the payments increase that much more, right? You all remember Sahara, right? What happened? They used to collect payments from very, very high rupees 10, rupees 50, rupees 100, right? Now when Supreme Court told them that, okay, please go and collect the money, it was a huge task for them, right? I'm not saying that it was a very ethical organization, right? But I'm just saying that if you go and lend, right, to very, very small people, right, which is the missing middle. So there are two kinds of missing middle, right? Like I said, right? One is the individual, and second is the organization, right? Now a lot of SMEs will not have access to credit at a favorable rate from these banks, and that is where the fintech banks or the world are really filling, right? So I need, so this is what Treasury does, right? Loan group will say, okay, I need this much money, we go and raise funding, right? So we'll need to do deposit execution, funding execution, market execution, we raise money at whatever rate, we go and do investor roadshows, etc., right? Now, a very important aspect is capital management, right? So have you heard of Tier 1 bonds, right? 81, etc., right? So now the regulator says that, okay, you need to have capital, right? to raise funds, right? So that is called your profit, right? Now, just to answer your question, just to maybe give you a stat, right? And a very interesting stat at that, right? Look at the outflow rates, right, of deposits, right? What you would see here, right? 2008 crisis happened, right? Iceland was majorly impacted, right? See the deposit outflow in 75 days. For example, for Iceland, it was 20%, right? In 75 days, right? Vamu, Northern Rock, 20% in 4 days, right? It was a huge crisis, right? On the verge of bankruptcy, many banks went bankrupt. But still the money didn't outflow because we didn't have the tech ecosystem that we have right now, right? And if you compare it to SUV didn't do much wrong. They just said, okay, we'll raise money, but we'll invest that money. We are not able to write a loan book. We'll invest it in long-term bonds. When the interest rates moved unexpectedly, the markup for those bonds were too high, right? Why were the markups too high? Because they invested in long-term bonds. Higher the tenor of the bond, higher the interest rate, right? They didn't do much wrong. Right? Their book was still very good. Extremely good book. If you read the investor pack, it was amazing. Right? But still, see the outflow of Silicon Valley Bank. 85% in 2 days. Right? So yes, the fintech banks are too good, right, in terms of reaching the last mile customer, reaching a lot of things, a lot of people who are undertapped, right? But there comes the risk. When you enter the fintech space, right, the risks are that much more severe. Right? Now, how does we manage the liquidity of a bank? Right? So, for example, let's say you become I'm pretty sure that you become a CFO of a big bank. Right? How will you? So there are only 2 areas that you need to worry about. Right? First is protection of the margin. Right? This we call it NII. Protection of the liquidity. Right? That there should not be a run on the bank. Right? So what does the regulation say? That you should have enough protection for the next 30 days of outflow. Liquidity is not managed by that, not in the fintech world. Liquidity is managed to the most severe scenario, the most stress scenario, right? Which is not 100% as mandated by regulator. What has to protect the bank against, and what Treasury has to protect the bank against, is a run on the bank. So we keep crazy amount of cash, right, just to protect the run on the bank. So when you go and manage a bank, or when you analyze a bank, the balance sheet of a bank, especially a fintech bank, see the amount of liquid buffer that they are carrying, right? That will describe the prudence, right? Because generally what happens is, why should I invest in liquid funds, right? I may invest in long-term bonds, right? The yield will be 1%, 1.5% higher, right? But imagine the risk that you are taking, right? So we as treasurers face this dilemma a lot of time, right? I'm getting 100%. Why should I invest in liquid funds, right? Why can't I take more risk? There's so much cash. But this is what we manage towards, right? That is the protection of a bank, and the stress in the bank is much more severe in the fintech world. Right? Now let's talk about the balance sheet. Right? Now, what does the balance sheet look like? Right? You will have floating rate loans mostly, and you will have fixed rate assets mostly. Right? So, sorry, floating rate loans and fixed rate liabilities, which is your FD, right? Now, you are in a decreasing interest rate scenario, right? Is it better for a bank or worse for a bank in the balance sheet structure that I described? But your loan book will reprice, but your deposit book will remain at the same level. Right? Now, how the structure of, so the biggest risk that fintech banks are facing right now, and as again the sir described, right, that when you get them into a unified platform, they have so much choice, right? So let's imagine there are 10 smaller banks and 5 bigger banks. So what does the smaller bank have to do? In the rate table of deposits, they have to place themselves at that much higher, right? So the cost of lending or cost of raising funds for smaller banks, in a way, it is also increasing. The cost of raising deposits is also increasing. So if you compare the cost of funds for a, let's say, fintech bank versus an established bank, the cost will be extremely high. Right? And that is introducing a lot of risk in the system, right? Because when you raise bonds or raise deposits at a higher cost, to make up that NII, you have to take on very risky customers, right? Or reasonably risky customers, right? So, what I want to leave you with, and I mean, I will just speak for 5 more minutes, right? But I think what one message that I really leave with you with, right? That analyze a balance sheet from the perspective of the strategy of bank, right? The kind of customer the bank has. Right? It is not like, let's say, NI margin and so on comparison. The devil will lie in the detail. I know a lot of you will be placed in JP Morgan research, etc. Right? So, I mean, it is extremely important to analyze the balance sheet from that perspective, right? What is the strategy of a bank, right? And when you move into treasury, for example, or when you move into any role in the bank, right, which is a strategy role in the bank, right, then one thing that you always remember is you manage to stress. Right? The regulator will not come and ask you as to how much loans are you writing, okay, how much margin goes, so nice. Right? They will always say, what will you do in a stress? Right? Are you managing to a stress? Right? Yeah, so the biggest challenge that the banks are facing are reinvestment rates. Right? So for a bank, for a fintech bank to raise money, right, and let's say to raise deposits, right, what do they have to do? They have to be placed very high on the rate table. Yes? Right. Now, what happens if they place themselves very high on the rate table? Right? You raise fixed deposits. Right? Now the interest rates are falling. Right? The only way that you can hedge your balance sheet is by taking a fixed to floating swap. I'm sorry if it's getting too technical. Right? But my cost of deposit is so high, I'll never sacrifice swap. Right? So it's very, so it might sound very romantic, okay, it's a fintech bank, right? It's an upcoming fintech bank, it's a very good investment, right? But understand the challenges that a fintech bank faces, right? The cost of funds is crazy, they can't hedge their balance sheet, right? Because again, the cost of funds is very high, right? Even if you swap it, you will never be able to match the swap rate. The swap rate is very low compared to your deposit cost, right? Your risk of outflow is so high that you need to give a lot of liquidity. So you need to raise a lot of funds. Otherwise, you are not protected. Right? But having said that, right, it's not all alarm bells. Right? If your credit models are very good, you can make a lot of money, right? In terms of capturing that missing middle, right? In terms of SMEs or in terms of borrowers who are untapped, or in terms of borrowers who are untapped, right? So yeah, I think that is what I wanted to leave you with, right? So I think let me know in case you have any questions.
Okay, so we quickly do a small round of discussion. Last for 15-20 minutes. I've been tasked to close this sharp at 5:50, and we have launch also. And I can see a lot of sleepy faces. There's a lot of sleepy faces across. So, Dipesh, my first question is to you. And it's very popular forward on WhatsApp these days. उसमें ये है कि there are the four people on one side, they're fighting with each other, and they refer to Russia, Ukraine, Israel, and Iran. And on one side is an Indian who's sitting who's planning a Diwali party. तुम लड़ो, मैं अपनी Diwali party enjoy करूँ, and I'm already planning where to go and what to do next. So with that context, Dipesh, my first question to you is, given your extensive experience in treasury management and financial markets, can you give us an overview of how global economic uncertainties, such as geopolitical tensions and market volatility, are impacting India's ability to raise capital? How can Indian companies navigate these challenges? There's a mic. You have.
It's a very interesting question, sir. Right? So actually, when I started my career, right, so I used to work with a firm called Sentisama, who only exported to Russia. Right? So what happened was, then one day, Mr. Putin decided to attack Crimea, right, or maybe annex it. Right? I tried to enter a market to hedge the swap at 57, and or to hedge my incoming at 57. And when I closed it, I was not able to solve. When the deal will go, and by the time I said close it, the market would have moved from 62 to 65. And I was able to close that transaction at 72. Right? Just imagine the kind of volatility. Now, in terms of, so, I mean, and to come back to the question, right? So, in terms of how India is placed in terms of, right? So, what I have seen is that Indian firms command a lot of respect, right, in terms of very stable macroeconomic scenario. Right? For example, if you look at UK, right, or if you look at even if you look at UK, right, there have been changing governments, right? We have had a very, very stable government, right? And in a way, it is very digital, right? So now the ability to raise funds, right, and I mean, if you look at 5 years ago or 10 years ago, I could raise a European commercial bond or ECB at 0.5%, 1%. Now the rates in UK are comparable to what there are in India. So that differential is no longer there, right? That you tap the overseas market and not the Indian market. Indian market has now much more options and much more liquidity. They are also so the Indian banks are one of the most agile in terms of getting the KYC done. So, for example, if I have to onboard Citibank in UK, it will take me 6 months. If I have to onboard Citibank in India, it would take me 20 days. So that's the ease of doing business which I see practically, right? And especially in terms of cost of funds and the ease of markets, right? I think we have reached a place where it is much easier to tap Indian market rather than overseas market, right? And the cost advantage that the overseas market had 10 years ago is no longer there.
Very basically it means we can continue with the Diwali party. Thank you so much. My next question is to Kapish. As someone who's deeply involved in financial services through ONDC, can you hear me? Yeah, he's about to talk, right? Thank you. What do you see as India's key strengths in its financial ecosystem? Where are the gaps, particularly in terms of infrastructure and digital inclusivity? And how do we overcome it?
I think strengths part is, the last story over the last 15 years is a big strength. We've been able to get digital identity to 140 crore Indians, right? Then we've been able to open accounts, bank accounts for them. Then we've been doing data processors as well as anyone. I think 70% people have access to smartphones. And you have smartphones and you have multiple products and services that you get access to. And there's UPI, right? Imagine, I remember that time when you used to have that IFSC code and 16-digit account numbers. You used to ask that to the other person. Now it's like you pay the contact number, its phone. And trust me, that countries still do that. IFSC numbers. It's a reality in some of the developed countries as well, right? So our biggest strength, obviously one of the big strengths is our digital infrastructure, right? In terms of what we've built, it has handled scale now, right? Even our stock exchanges, look at the volumes that they're handling now, right? Both the Indian companies, the equity markets, and everything. So we can handle transactions at a much bigger scale than other countries will never reach, most probably, right? Given our size. Now, where do I see the gaps, right? Is how do we make it accessible to the lowest person who is not very financially literate, is residing in a rural area with not great internet connectivity, right? Doesn't understand English, doesn't understand how to operate an ATM because most ATMs are in English in terms of doing it. That's let's say the vision, right? That if that person, we're able to provide financial services, right? When they want a small rupee loan or some level of very small premium insurance coverage or some tools. So that's the end goal. How do we get there? Now, this is going to be a combination of technology. It's going to be a combination of a lot of policy work. You will need tremendous government support to go there, right? Because a lot of time, there is a reason why that is not happening today, right? There is a reason it's not viable by cost, it's not viable because of some other political reasons or whatever it is. So it needs a combination of policy and tech kind of coming together. And that's the way to, and AI would be one, facial recognition would be a very big one, right? In China, this is example, like I want to file a claim, an app opens up, they ask you a question and then looking at your facial recordings. It's simply a lie detector test via your face. If you match that, your claim is in your bank account, like for your motor insurance. So I'm a big believer in vernacularity. I think we have not seen a lot of companies come innovate on vernacularity. You still see a lot of English and Hindi interfaces. And that's not majority of I believe the urban cities and metros and all. And voice based, right? Again, I might not be able to read and understand, but if you give me clear instructions in my language, I might be able to get some basic transactions done. So, and then you need a tremendous amount of government commitment. Now, if you talk about UPI, I have to always question how did UPI come about? It's free for the consumer, it's free for the merchant, right? There's banks bear the cost to doing it, right? Obviously, they get subsidized. How did that happen? That's policy, right? You wanted to create something happening, so you created a pool to subsidize it. So some of these problems, that's why I said tech might create a path, but you need tremendous policy support, get the ecosystem support into it. Because if I am not viable, then some funds be created to make me viable. Like one of the things we've been pushing is a new to credit guarantee scheme, right? Because if I don't think for a new to hit, right? If you financiers are lending, the interest rates are high and all. So can we create a corpus, right, which will give the lender 75%, 85% cover. So they will experiment more. So that's what I have, and this is what it will take. And it will take a lot of what in the seminar, this is Penny advice you say, बहुत out गया भाई, ठीक है जहाँ पे हमने इसको कुछ जहाँ बेचना चाहते हैं, so that's what it will take.
But it's good to hear कि 100 रुपए का loan मिलेगा to the last mile, right? And followed by insurance also if you want, which is the need of the hour.
If all goes well, the 20 rupee daily SIP will be a reality in next 12 months, right? Manage to get 100 rupee SIP. Now, if 20 rupees logic, right? You 600 a month, 7,000 a year. Some growth 8,000. You can easily do 50% LTV in your 4,000 rupee loan. If that is 15 lakhs. And you build credit history, right? Then other products will be built on top of it.
So the price of a pan is equivalent to the amount of SIP which you can put in now. So that's cool.
Per product, so your pricing will substantially come down.
Yeah, absolutely. Thank you, Kapish. Coming back to you, Dipesh, I have a question. With UPI processing billions of transactions monthly, and of course, India has pioneered that and it's shown what we can do with UPI. What do you think has been the most significant shift in India's digital payments landscape in the recent years? And there's another follow-up question to this. What emerging fintech innovations do you see in the coming decade, which all this revolution will force?
I think the biggest advantage that India has in terms of digital landscape has been UPI and Aadhaar link system. Right? I have never seen a system work so seamlessly, right, like it does in India. Right? Now, what else can you build on it? Right? And being very, very ambitious, and being very, very, right, I mean, ambitious is the word, right? So, why can't we have UPI for international transactions? Just imagine the kind of game changer it will be. Right? It may be very bad for like the international financial commerce code.
Sir, Visa and MasterCard is are sending the shooters to India. When you're saying this, yeah, please go on.
Right? But I think that is not far away. Right? I think there must be some people who must be building this infrastructure. But in case we are able to build that, right, especially like Kapish said, right, in terms of facial recognition, I think there's a lot of development that we can do for facial recognition, right, especially in terms of right, linking it to Aadhaar and linking to other things. Right, we have come a long way. And the third thing that we have to do, right, is that though the UPI has gone to billions of transactions, there are some some people who are still untapped. Actually, that last mile connectivity, if there is someone who can figure that out, right, then the 20 rupees tip will become a reality and will benefit a lot of Indians.
Thank you so much. Jitin, I to you. Would you like to take the mic? Thank you. Jitin, with SavelN, you created a revolutionary model in healthcare financing. How do you see fintech startups playing a role in ensuring greater financial inclusion, with everybody going around? And we've been talking about healthcare. Kapish also mentioned about, of course, we also touched that about, especially on the insurance. Like to hear.
Yeah, so Samir, I think if you look at healthcare market, right, so healthcare spends are about $100 billion per annum in India. It is the single largest spend at a household level. If you compare it to the consumer durable, let's say, market, so mobile phone market is about $40 billion. In this $100 billion, 85% of expense is out of pocket. So what it means is that credit availability for a product where out of pocket expense is very high is extremely good product market fit. Right? So I think my personal sense is that everybody is talking about the growth of India, and I think banking structure that Dipesh talked about, Kapish talked about, the entire revolution ONDC is building, but eventually this has to be consumed by humans. It has to be built by humans, it has to be nurtured by humans, it has to be consumed by humans. And I believe in healthcare financial inclusion, while there could be bottom of the pyramid schemes which would cover, let's say, Ayushman Bharat, etc. The availability of on-demand credit will revolutionize how people consume personal health. And that will have a big impact on personal productivity, employer productivity, etc. So I think from an inclusion perspective, embedded finance in healthcare is a must. What I mean by embedded finance is that you're undertaking a transaction and at that point you are available to, let's say, unlock credit for a very specific use. So I think there could be a lot of work that can be done there. For example, I'm SavelN are doing exactly that. And I think we've just begun, so we've not even stayed 1% market. So I believe that whether it is insurance, so some use cases must be covered by insurance, and maybe lending may not be the right use case. But I think for a lot of other use cases, lending would be the right product. I'll give you an example. You could have a 1 crore health cover, but if you were to spend 1 lakh rupees at a dentist, you will not get that money. IVF as, let's say, treatment is not covered by traditional maternity cover. So why an insurance company does not cover dental? Because, for example, I can get a root canal treatment done in Delhi for 5,000 rupees.
True.
I can also get it done for 50,000.
Yeah.
Now, I may choose to pay 50,000. Somebody else may be happy with 5,000. How will an insurance company price that product? Right. So I think the biggest inclusion that needs to be, brought into healthcare is a little bit of standardization, which has happened in hospitals to an extent, but also outpatient, and availability of embedded finance at the point of healthcare. If you democratize that there, you would have an extremely efficient society, people will be happy, and I think we sometimes don't attribute enough productivity quotient to personal happiness. So if you see stress as a killer, right? So if you're personally happy, you're able to perform very well at work, and that compounds, has a compounding impact. Look at Bangladesh. So when they built this entire export-led textile business, some very, poor women suddenly became very happy.
Yeah.
So they were very happy running their, houses, and suddenly, you see Bangladesh outpace Pakistan, for example. So I think happiness, which is led through personal.
And I hope Bangladesh continues to outpace Pakistan in everything.
I think now India will take over their business because of the way it is. I think Heroku is smiling. But in general, I think that's my answer to inclusion specifically in healthcare and embedded finance in general. Right? At the point of consumption, give responsible credit.
Thank you so much for this answer. Kapish, my next question is to you.
Healthcare expenses are not even covered on inflation calculations.
Yeah.
True.
So when you look at all the inflation numbers, because it's absolutely right? Biggest expense, but it's not even reported. That's another one big thing that we should be doing.
Healthcare inflation is 16% has been.
No, but I still tell you, the root canal operation you mentioned, I had a friend of mine who was in the US, studying in the US, he said, "My India root canal
$3,000. So we did
$3,000 there.
So we did a research in Singapore for our product. So it's like 2.5 to 3x in dental specifically. So, which is why Prime Minister Modi is saying, heal in India. So the medical tourism, I think, can be a huge market where people will come to India, travel plus treat. So that travel and treat, I think, is in the next decade going to happen.
Yeah, so true. Abki baar sabko health insurance.
We have 5 lakh, 70 plus.
Yeah, so Kapish, my next question is to you, and we were talking about it when you entered the room. कि ऐसा एक scenario हो that all corporates come to IIFT for placements, right? Or none of these guys shows up because they say कि हमने अपना startup start कर लिया, we don't need your job, okay? और हमने अपना fintech start कर लिया, तो आप चाहे पियो और घर जाओ. So my question relates to that. So India has seen a huge boom in number of the fintech startups in general, unicorns, unicorns, whatever you may call them, okay? So from your point, what factors are driving the startup ecosystem? And what needs to be done further to ensure that this momentum stays or carries more ways?
So I think what has captured this space is obviously a lot of VC money that has been there. That's been available.
आते रहेंगे, पैसे आते रहेंगे.
अभी तक तो आई रहते हैं, फिर उसका नहीं है. But obviously, one is obviously technology became accessible, right? Smartphone data cost, smartphones cost became cheaper. You gave access and created loads of host products. So this gave you a different way to solve the problem, right? It was not like the banking statement was always there, right? The system was already there. It's just like once something happened, you could digitally verify better system and you can over it. So a lot of tech happened, a lot of VC money came in. And even as the next generation entered, you're absolutely right. People don't want to work with a large corporate. They're like, I'll start off my own. Some of that cultural change also happened, right? In terms of doing that, I want to try out something of my own. And if you look at the biggest companies in the world, right? You look at Google, Facebook, these are all not very old companies. If you look at your world history, it's not like it's not like a Coca-Cola which started in 1885.
Absolutely.
Right? These are what started in 1880s, some of them in 1990s, so it's 2000s, 2004. Right? So I've seen some of those companies also come. I think that's all combination of those factors that have come together. Right? Whether it was, aspiration, whether it was smartphone technology, what I would like to see, specifically two areas, I think legal tech has not happened in India. Right? There are things with 3-4 crore cases, pending, 70% of it relates to real estate. Judiciary is not as efficient as you would want it to be. You still don't have virtual, you have some level of virtual coding which started at the time of COVID, right? But there's still a lot of manual work. AI could be a big boost for some of these law firms and digitalizing. Not seeing, since I know some companies are doing legal tech now. There's one area, when you talk about lending, look at the collections leg of it, right? It's still very physical. right, in terms of doing things. How do you digitize it? How do you get speedy recovery? Right now, more and more digital will happen. Let's say you're booking something on a travel thing on a website, something goes wrong, what is your recourse? Right? You rely some of this is a genuine company, you roll it back, else go for it. File a consumer code, something will happen on the nation system. So that layer of customer grievance, legal, judiciary, I think needs a lot more innovation. In that, and again, I will come back when only the government pushes products from the second thing we're discussing financial services as insurance. Right? Simplify the damn thing. It's too complicated right now. Right? Make that product. We are speaking to one company who's trying to do in this. Like Tito did start something, right? Which is an advisory that you can call, you tell you which insurance. Like if you want, go to Policy Bazaar, search for health insurance. If you're 20 health insurance, search it, give 20 plans. That's 400 choices. True. In jargon that I don't understand. Yeah. You need to simplify that product. Right? Absolutely. In terms of doing it. A lot of insurtechs have come as a SaaS play right now for insurers, right? The online sale of insurance is still very less. Like if you, and Policy Bazaar obviously dominates it, but even they have a lot of big operational layer or in terms of call center management and how they're doing things. Like innovation in that space, how to make this product simpler to understand for the common person, is something that I would be very keen to see some of that come up.
Great. And to that line, I would like to mention that IIFT is finally coming up with its own startup incubator in Delhi, right? And I promised the team that if it happens, I'll get two Shark Tank judges here. One is Aman Gupta from board, and the other is Vinita Singh from Sugar Cosmetics, which provided actually start that. So, the first thing was startup setup, and I'm sure it will gather momentum as we go along. Dipesh, coming back to you again, right? Very recently in the news, there was an article. There was one CEO of a leading company, and he got a call. उसके account से 6 crore रुपए निकले. I don't know whether you heard about it, read about it. Very recent news and very educated guy, obviously, right? So cyber threats are becoming increasingly sophisticated, right? It is calls coming to us, people like us, right? And of course, I'm taking the assumption of us being very smart people, right? So they're getting extremely sophisticated. What are the major cybersecurity challenges?